Good afternoon, everybody, and welcome back. I hope you guys all had a good weekend. I originally had meant to cover this story on the weekend, but I ended up getting tied up with a few things personally. But this one is going to be about how the SEC rejected another Bitcoin ETF. This time it was by ARK and 21 shares. And we'll quickly go over this here. ARK has yet to convince regulators that its ETF can protect investors from market manipulation. This is from Decrypt. Another day, another refusal by Securities and Exchange Commission SEC to allow a Bitcoin spot ETF to launch in the United States. And so I'm sure this is frustrating a bit of traders and frustrating some of the people within the wider crypto community space in general. Personally, I don't really have much interest in a spot like a Bitcoin ETF, but I guess that's just kind of like a personal thing, more or less. To me, it just means more centralization and regulation within the cryptocurrency space, which I am not a fan of. Goes on to say the latest rejected proposal came from Cathie Wood's ARK Invest and global ETF provider 21 Shares, which for a second time joined forces in an attempt to launch the ARK 21 Shares Bitcoin ETF. It was initially filed last year, May 13th, a month after ARK's first attempt to list the product on BZX was turned down. So they are continuing the fight. An ETF, short for Exchange Traded Fund, is an investment vehicle offering indirect exposure to an underlying asset. This can be useful for investing in items that are difficult to own and store by oneself, such as gold, for money or cryptocurrency. And personally, this relationship between gold and cryptocurrency doesn't make a lot of sense. If I have $1 million in gold, it's going to be difficult to store it. Not saying it's impossible, but you're going to want some security. If I have $1 million in cryptocurrency, if you know anything about cryptocurrency, you can store it on a hardware wallet. You can use paper wallets. You can have $1 billion in cryptocurrency, and ultimately nobody could ever know. You could, if you wanted to, memorize your private key, your mnemonic phrase, and ultimately you could be taken to a border naked, and as long as you had access to the internet somewhere, wherever you were being expelled to from the country, you could always have access to your money so long as you memorize your private key. So this idea of it's difficult to store Bitcoin or other cryptocurrencies, that's kind of ridiculous. I think ultimately what these ETFs will do will just kind of open the door for the so-called normies to be able to invest in Bitcoin through their banks, which is really what the centralized financial system wants. They want to create an environment where you're buying Bitcoin or you're buying exposure to Bitcoin or other cryptocurrencies through banks and the stock market. The SEC's rationale for the decision is the same as last time. ARK has failed to demonstrate that the rules of its exchange are adequate to protect the investing public from fraudulent or manipulative acts and practices. And I think I've mentioned this before, but the best way to protect yourself from anything fraud-wise within the cryptocurrency space is just due diligence is the biggest thing, and practice self-custody, which has been seen with the case when you weigh that argument against Celsius, FTX, and all the other centralized exchanges and wannabe DeFi things that have gone down over the past year. Goes on to say, and I quote, an exchange that lists Bitcoin-based ETPs can meet its obligations under Exchange Act's Section 6B-5 by demonstrating that the exchange has a comprehensive surveillance sharing agreement with a regulated market of significant size related to the underlying or referenced Bitcoin assets, explained the SEC in its rejection. So again, to me, demonstrating the exchange has a comprehensive surveillance sharing agreement. So ultimately, they really want to be able to track where the Bitcoin is and who's buying it. And this is, again, why I think that they just want to create the narrative that you should be buying it through, these qualified regulators and storing it through these qualified custodians. ETFs would also give institutions a green light to effectively buy Bitcoin when they are otherwise barred from doing so by an internal charter. They probably are still doing it, to be honest. This has made crypto bulls thirsty for such a product to hit the US market, but so far, no dice. Personally, I don't think that that's true either. I think that many of the people within the cryptocurrency space, crypto bulls, people that have been in Bitcoin since the beginning, they don't need this. They just see it as something that will pump their bags, I guess. But I mean, it's not necessarily needed. these institutions are no doubt buying Bitcoin right now. They're probably just doing it secretly. It's not on the books. By contrast, the SEC willingly permitted multiple future Bitcoin ETFs, futures Bitcoin ETFs, which is a different kind of thing, to launch in the beginning of October 2021. The ProShares Bitcoin Strategy ETF, which hit the market first, had one of the most attractive openings in the New York Stock Exchange history. And that's probably just due to the hype, especially around that time of 2021. There was a lot of hype around cryptocurrency. Unlike spot ETFs, which again, that hype around cryptocurrency had nothing to do with centralization. It was all because of DeFi and then eventually NFTs. None of that had to do with anything centralized. Anyways, unlike spot ETFs, futures ETFs are backed by Bitcoin futures contracts, which are promises to purchase Bitcoin for a set price at a later date. Unlike the Bitcoin spot market, the Bitcoin futures market is a regulated market in which an ETF can have a surveillance sharing agreement, such as the CME Bitcoin futures market. So the futures are out there, but they want these spot ETFs out there. I believe you can trade spot crypto like on any centralized exchange. I'm not going to bother naming any. I don't support centralized exchanges. I don't like leverage within this market. I think it's toxic and just pretty much a cancer. Especially because these people that run these exchanges, they have access to the order books, so they're going to push you towards your stop loss. And if you're over leveraged, which basically everybody is, they're just hunting for that, and you're going to get liquidated. It goes on to say, in its own filing for a similar product, Grayscale argued that it could enter a surveillance sharing agreement with the same market when launching a Bitcoin spot ETF. The SEC did not recognize CME futures as adequately related to spot Bitcoin. So they're trying to kind of separate the two in terms of their definition for it. I think I said at the beginning here, I don't really care much for Bitcoin ETFs. I prefer people to practice self-custody. I prefer people to use decentralized exchanges. I know that the decentralized exchange market for Bitcoin is not very large. If you really want access to it, you should use Uniswap, because then you can just go and trade RenBTC or WBTC, which are just wrapped versions of Bitcoin that kind of like appear on the Ethereum chain and gives you access to Bitcoin. And then you can actually take that and you can put it into DeFi in the different DeFi apps that exist, and you can get a yield on your assets. And I think that's a better way to expose yourself to Bitcoin. I think that's one of the benefits of Ethereum. Ethereum is a blockchain, has its own ledger, and at the same time it gives you the ability to make these amazing applications that exist on top of Ethereum. And then you can use, like I said, the Bitcoin wrapped assets to get yield on your investment. Overall, I don't think this is really going to affect the Bitcoin price right now. You can see, I think this article came out like 4 days ago, and Bitcoin has just been maintaining its monthly gains since then. And over the past 24 hours, we've had a little bit of selling off, which is probably okay. I think that I was mentioning before that I personally believe through February we're going to see some consolidation as we kind of get into spring and get an idea of what's going on geopolitically, because the war in Russia is not slowing down, the proxy war between Russia and NATO. And there is also the growing crisis within China. They've been really downplaying the effects that that the COVID, their relaxing of COVID policies has had on the country. And I think we're going to see that play out more and more, as well as some of the other issues that have been surrounding China for quite some time, coupled with the long-term effects that the lockdowns had on the economy and people's ability to earn money, inflation, all that. So I don't expect Bitcoin to just explode anytime soon. I could be wrong. I hope I'm wrong, because I'm holding plenty of altcoins and Bitcoin, and I would personally benefit from that. But I just like to be realistic. I mean, if you look at Bitcoin overall, last time we did have a little bit of like kind of relief, like pumps here, which kind of looks similar to what's going on here. I mean, again, this could be totally different. We are in a different time. Like this, the world of 2017, 2019, 2020 is not the same as the world of 2023. They are very different. So there's different factors at play, and micro to macroeconomics is not the exact same as it was before. So That remains to be seen, but I do believe that Bitcoin will ultimately continue to hold its monthly gains. Other than that, there's really nothing else kind of here. I just wanted to cover this story. I think that there's probably going to be some more attempts to make a spot Bitcoin ETF, and we'll kind of see what effects that it has on the market. Let me know what you guys think in the comments section if you think that these spot ETFs will do anything good for the market. Are you excited for them? Your own thoughts about its contrast to DeFi, and whether or not you think that ultimately DeFi and self-custody should be the way forward and is what should be stressed to the so-called normies as they are getting invested in Bitcoin. If you like this content, please, consider subscribing. If you enjoyed the video, give it a like, and I'll catch you guys on the next one, and have a good day.